Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Gold International Resources Corp. Limited annual report. China Gold International Resources Corp. Limited is a gold and base metal mining company that provides various services and businesses. At the core of its operations are mineral resource exploration, development, and mining activities in China and Canada. The company's portfolio includes significant interests in two major mines: the Changshan Hao Gold Mine in Inner Mongolia, China, and the Jiama Copper-Gold Polymetallic Mine in Tibet, China. In addition to its mining operations, the company engages in logistics and transport-related businesses, which likely involve managing the movement of people, equipment, and materials necessary for its mining activities. It also holds investments through its investment holding activity, indicating a diversified portfolio that extends beyond its core mining business. Furthermore, the company operates as an issuer of bonds, providing financial services to investors and other stakeholders. This adds another layer of complexity to its operations, highlighting its ability to adapt to changing market conditions and capitalize on new opportunities. Overall, China Gold International Resources Corp. Limited's diverse range of businesses and services underscores its position as a multifaceted player in the mining industry. China Gold International Resources Corp. Limited, market capitalization of $76 billion, is significantly larger than the average industry peer of roughly $1 billion. This shows that China Gold International Resources Corp. Limited holds a significant advantage in their industry. China Gold International Resources Corp. Limited trades at a lower price-to-earnings ratio of 21 times and a higher price-to-book ratio of 4.18 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 30% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified by examining the key factors that have impacted a company's revenue over time. On the positive side, revenue growth has been driven by several key factors. Firstly, an increase in realized average gold price has contributed significantly to revenue growth. Additionally, increased production capacity at the Jiama mine and new contracts entered into during the year have also boosted revenue. Furthermore, the company has seen a significant increase in revenue from sales of gold doré bars to China National Gold Group Co., Limited, CNG, by $91.6 million, as well as a substantial growth in revenue from sales of copper concentrate and other products to CNG by $459.7 million. The company's subsidiaries have also seen an increase in construction services provided to the company by subsidiaries of CNG. On the other hand, revenue decline has been driven by several factors. Decreasing gold production at the CSH mine and total gold production have contributed to a decline in revenue. Additionally, decrease in ore processed at Jiama mine and a decline in average copper ore grade have also impacted revenue negatively. Furthermore, an increase in cost of sales and a decline in mine-produced gold, concentrate revenue, and mine-produced copper revenue have all contributed to a decline in revenue. Overall, the company's revenue growth or decline has been driven by a combination of factors, including changes in production capacity, new contracts, and fluctuations in commodity prices. The financial performance of the company has undergone a significant transformation. A notable change is observed in its net income, which has experienced a substantial increase from $65.3 million to $472.3 million over a certain period. This represents an increase of $407 million, indicating a considerable growth in revenue and profitability. The profit margins have also shown stability, remaining at 30% for the basic dividend. However, it can be inferred that the overall profit margins have likely increased due to the significant rise in net income and corresponding decrease in certain expenses. This suggests that the company has become more efficient in its operations, leading to improved profitability. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided data, the net cash from operating activities has increased significantly over the past year. In 2025, the company generated $1,234,119 in operating cash flow, a substantial increase from the previous year's figure of $1,143,819. This upward trend is further supported by the operating cash flow margin, which has also shown improvement. The company's operating cash flow margin for 2025 was $143,419, up from $134,919 in 2024. This indicates that the company is generating more cash from its core operations and is better equipped to meet its financial obligations. Overall, these figures suggest that the company is indeed generating positive operating cash flow, which is a key indicator of its financial health and stability. The company's debt level and interest expenses have undergone significant changes over the past year. According to the extracted summaries, the debt level has consistently decreased across various pages, with a notable decrease of $214,770 from 2024 to 2025. This trend is evident in pages 51, 52, 63, 105, and 145. In terms of interest expenses, there have been decreases observed on multiple occasions. Pages 52, 81, 108, and 137 all report a decrease in interest expenses, with the largest change being a minus 15.6% reduction from $22,390 to $18,804. The only instance where no significant change was mentioned is on page 51. Overall, it appears that both debt level and interest expenses have decreased significantly over the past year, indicating a positive trend for the company's financial health. In reviewing the performance of various segments within a mining operation, it is clear that some areas excelled while others struggled. The mine-produced gold segment stood out as a strong performer, boasting significant revenue and mining operating earnings figures. Specifically, this segment generated $338,473 million in revenue and $173,597 million in mining operating earnings. In contrast, the mine-produced copper concentrate segment lagged behind its gold counterpart, indicating areas for improvement. Despite generating substantial revenue of $971,652 million, this segment's mining operating earnings were lower than expected at $510,394 million. These discrepancies highlight the need for targeted efforts to optimize performance in the copper concentrate segment and align it with the success seen in the gold segment. Management is expressing confidence in the company's dual-listed capital markets, indicating a positive outlook. They plan to deepen reforms and focus on stable production and expansion potential of core mines. This suggests a strategic shift towards optimizing existing operations. In addition to domestic growth, management aims to expand its footprint through high-quality overseas assets. This indicates a long-term commitment to diversification and global presence. The company's strategy is described as clear and consistent, providing stability and direction for stakeholders. Specifically, the resumption of operations at Jayama mine with reduced capacity and the advancement of Phase III tailings pond construction demonstrate progress in key areas. Furthermore, separate production guidance for each mine in 2026 will provide transparency and help investors make informed decisions. The company's financial performance has been marked by its commitment to rewarding shareholders. One notable aspect of this commitment is the payment of dividends. According to the provided summary, the company has indeed paid dividends in various amounts over the years. On page 10, it is stated that a total dividend of $0.47 per share was paid out. This is further reinforced on page 65, where it is mentioned that $31.7 million was distributed to shareholders and an additional $0.2 million to non-controlling shareholders as dividends. The company's dividend payout for the year ended December 31, 2025, was a significant $186,785,121. Interestingly, page 69 also mentions that the company bought back shares through a special dividend. This indicates that in addition to paying out cash dividends, the company has also utilized its resources to repurchase shares from the market. That concludes the financial summary for China Gold International Resources Corp. Limited. Feel free to comment below, and I will be happy to answer them when possible.